We banter the word insurance around all the time. I buy insurance. What is insurance? It's financing risk. So let's simply break it down. Every business has risk. You have one of four options with risk. You can retain it, which is really self-insuring it, and every business self-insures risk every single day. You self-insure the risk that your customer is going to pay you after you deliver on an order. That's just part of the risk of being in business. You can transfer risk by contract. You see that with the customers you do business with. They are constantly trying to transfer risk to you. A classic example of risk transfer is your landlord. In the lease agreement that gets signed with a landlord, there's indemnification, waiver of subrogation language, which basically says we're transferring all the risk over to you, and if something goes wrong and somebody gets sued on this property and they name us, the landlord, in the lawsuit, you, the tenant, are going to step up and you're going to defend the landlord and hold us harmless. So by contract, the landlord transferred the risk to you. The third thing you can do with it is eliminate it. You find a machine that's old, it's dangerous, it's causing problems on the floor, or you find a process that is got repetitive injury written all over it. We had a client that had a repetitive injury claim over a mechanical device used in shipping, and they found that they could replace it with an electronic device and a printer, and the repetitive motion went away, and it saved a tremendous amount of money on future workers' comp claims. In that case, the risk simply went away. They removed it. The last of the four options is to finance it, and that's what insurance is. You have a $2 million building. You could self-insure it. If something happens to that building and it burns down, as long as you can write a check for $2 million to replace it, as long as you can write another check to replace everything inside the building you own, and as long as you can write another check to compensate and pay business income to yourself and potentially pay your people to stay on board while you're rebuilding your building. But you rebuild your building and you don't have any employees, you still don't have a business. So insurance becomes the most affordable solution, because within insurance there are hundreds of thousands of shops like yours that have all banded together, and all of you paying $1,500 to $2,000 a year to insure your $2 million buildings. Then if one of you burns down, collectively the money goes in and replaces that one building. That's what insurance is. You're just simply financing risk.